Let's begin with a look at how the markets performed this week. First, Europe. As at Friday, the 2nd of December, Euro Stoxx 600 closed on 443.61 and dropped by 0.08%. London FTSE closed at an all-share index of 7,567. It was up by 0.11%. The markets in Germany saw the DAX close positive at 14,535 and it was up by 0.32%, while the CAC 40 Paris closed and ended the week with 6,747. It was down by 0.10%. Finally, the IBEX 35 in Spain ended on a negative note at 8,388, closing and losing at 0.23%. Now to the Nigerian stock markets. At the end of the last weekday of trading on the Nigeria Stock Exchange, the market saw a total of 159 million shares in 3,080 deals, corresponding to a market value of 5.04 billion traded. The current market capitalization of the Nigerian Stock Exchange is 26.2 trillion naira, which is an improvement on Thursday's figures of 25.9 trillion market capitalization. Let's take a look at Wall Street as at Friday, the 2nd of December. Wall Street almost ended the week with all gains, with a Dow all-share index closing on 34,298, down by 0.28%. The S&P ended on an all-share index of 4,055.98. It was down by 0.51%. And then on Wall Street, the Nasdaq ended with an all-share index of 11,399.96, down by 0.72%. Now for some top business stories that made headlines this week. U.S. consumers spent a record $9.12 billion online shopping during Black Friday this year, according to Adobe, which tracks sales on retailers' websites. Overall, online sales for the day after Thanksgiving were up 2.3% year over year, and electronics were a major contributor as online sales surged 221% over an average day in October, Adobe said. Toys were another popular category for shoppers, up 285%, as was exercise equipment, up 218%. Many consumers embraced flexible payment plans on Black Friday as they continue to grapple with high prices and inflation. Buy now, pay later payments increased by 78% compared with the past week beginning November 19th, with buy now, pay later revenue up 81% for the same period. Now, the Democratic leader of the U.S. Senate urged lawmakers on Monday to back his proposal to bar the U.S. government from doing business with companies that use semiconductors made by producers the Pentagon considers Chinese military contractors. According to Senator Chuck Schumer, as he spoke on the Senate restart after the Thanksgiving holiday recess, I quote, "If American business wants the federal government to buy their products or services, they shouldn't be using the kind of Chinese-made chips that made because of Chinese government involvement, which put our national security at risk," end of quote. The South African rand and government bond prices fell sharply on Thursday as investors digested news that President Cyril Ramaphosa may be impeached following a panel of experts' findings against him. The rand weakened by 2% to close at 17.5 against the dollar in New York, posting its largest percentage decline since June 10. It fell as far as 17.9 per greenback during the session. Ramaphosa is expected to face a fierce battle for a second term as the leader of his party, the African National Congress. Chinese property developers' shares and bonds soared on Tuesday after regulators lifted a ban on equity refinancing for listed firms, the latest support measure for a cash-squeezed real estate sector that has been a key pillar of the world's #2 economy. The move will make it easier for developers to obtain fresh funding, analysts say, but reviving demand from home buyers is expected to remain challenging. Shares and bonds surged after China's Securities Regulatory Commission said on Monday that it would broaden equity finance channels, including private share placements for China and Hong Kong-listed developers, lifting a ban in place for years. The Central Bank of Nigeria has disclosed that it is working assiduously towards achieving its 95% financial inclusion target by 2024, with the recent launch of its revised National Financial Inclusion Strategy and a number of other important policy frameworks. It listed the other initiatives to help ensure 95% of Nigerians have access to financial services, to include the National Strategy for Leveraging Agent Networks for Women's Financial Inclusion, the National FinTech Strategy, and Nigeria Payment System Vision 2025, amongst others. Italian energy company Eni is in preliminary talks to buy private equity-backed gas and oil producer Neptune Energy for around $5 billion. Neptune produces around 130 barrels of oil equivalent per day, 3/4 of which is gas. It has operations in Norway, home to Eni's VAR unit, Britain, Indonesia, where Neptune share licenses with Eni, Algeria, the Netherlands, and elsewhere. Neptune is owned by China Investment Corporation, the Carlyle Group, and CVC Capital Partners. In Benin and Togo, electric automobile models are gaining ascendancy over petrol-powered rivals as customers are opting for environmentally friendly travel, and taxi drivers are switching to machines that, above all, are less expensive to buy and operate. Triggered by Russia's invasion of Ukraine, the cost factor has become more and more important in the face of an explosion of fuel prices this year. To allow these motorcycles to be competitive with gasoline motorcycles, Beninese authorities have decided to exempt electric vehicles and hybrids from VAT and customs duties. Investors on Wednesday backed HSBC Holdings' planned $10.1 billion sale of its Canadian business as part of an international pullback by the bank, which faces pressure to focus on Asia to boost profits. The lender's shares rose as much as 2.8% in Hong Kong after HSBC declared it would book a $5.7 billion pre-tax gain on the sale to Royal Bank of Canada and may use the proceeds to pay shareholders a one-off dividend or buy back shares. The stock finished Wednesday's session at 47.15 Hong Kong dollars, up 1.95%. Now, Nigeria's Minister of Finance, Budget and National Planning, Zainab Ahmed, on Thursday called on the Commonwealth Association of Tax Administrators to join forces with Nigeria in assisting that the skewed international tax rules be straightened for the good of all, insisting also that the current international tax rates are challenging, particularly for developing countries. She also mentioned that pillars of support, including the framework by the central bank and the technical assistance guarantee, would support countries that are struggling with tax compliance across the country. Now to other news. The UK government is considering relaxing rules brought in to stabilise the banking system after the credit crunch as part of government plans to deregulate the City of London and spark a post-Brexit second big bang for financial services. The ring-fencing regulations introduced unilaterally by the UK in the wake of the 2008 global financial crisis require lenders to separate their high street operations from other activities such as investment banking or international operations. Under the potential changes, Britain's largest banks, such as Barclays and HSBC, will still be ring-fenced, while smaller lenders, such as TSB and Santander UK, might be released from the following rules. While the UK has not been restricted by EU rules in this case, ring-fencing has been one of the many pieces of legislation under review by ministers hoping to bolster financial services, which lost free access to EU markets after Brexit. Swedish fashion giant H&M on Wednesday became the first big European retailer to lay staff off in response to the cost of living crisis, despite a still tight labour market as it tries to save $190 million a year. The move by the world's number 2 fashion retailer to reduce mainly back-office staff comes amid surging inflation and soaring costs related to the Ukraine war, which have pressured companies across Europe and the US to save cash. The cuts by H&M, which employs roughly 155,000 people, are part of a plan laid out in September to save 2 billion Swedish crowns per year. In September, H&M posted much lower than expected quarterly sales as it saw consumers tightening their belts, highlighting its struggles to compete with its bigger index partners-owned rival Zara. Major oil producers are expected to stick to their current output strategy or even slash production further when they meet on Sunday in the face of falling prices, a potential Russian oil price cap, and an embargo on Russian crude shipments. At the last ministerial session in October, the 13-nation OPEC headed towards an agreement with Riyadh and its 10 allies led by Moscow, collectively known as OPEC Plus, when they agreed to reduce output by 2 million barrels per day from November. The OPEC reduction amounted to the biggest cut since the height of COVID-19 in 2020. Amidst fears of economic slowdown, Sunday's cartel meeting convenes ahead of the EU enforcing an embargo on Russian crude shipments from Monday. G7 countries, the EU and Australia had also appeared to agreeing on a $60 per barrel price cap on Russian oil on Thursday.